All right, good afternoon, everyone. This is Joe Bacella here at Chaikin Analytics, and I'd like to welcome you to our presentation of the Ultimate Stock Checklist and Best Small Cap Stocks to Buy Today. Presenting today is Mark Chaikin, founder and CEO of Chaikin Analytics. Now, as a reminder, this webinar is being recorded, and a copy will be sent to everyone who has registered. Please submit your questions throughout the webinar using the Zoom Q&A window, which you can access in the upper left-hand corner of your screen. Now, before we get started, we'd like to welcome our guest, Barry Burns of Top Dog Trading to the webinar. Barry, take it away.
All right. Thank you, Joe. Appreciate that introduction. Appreciate working with you and with Mark and everybody over there at Chaikin Analytics. And of course, we got a lot of people here from Top Dog Trading today. So want to welcome everybody and very happy to be participating here with Mark and sharing his wisdom and insight with the Top Dog Trading audience. And I'm real excited to be here as well. So by the way, for those of you the two people out there who maybe haven't heard of Mark Chaikin, because he is a legend in the industry. After 40 years on Wall Street as a trader, a stockbroker, analyst, and options trader, Mark founded Chaikin Analytics to deliver proven stock analytics to investors and traders based on the Chaikin Power Gauge, which is a 20-factor alpha model proven effective at identifying a stock's potential. Mr. Chaikin pioneered the first real-time analytics workstation for portfolio managers and stock traders, which is now part of the Thomson Reuters Institutional Workstation, and developed computerized stock selection models and technical indicators, including the famous Chaikin Money Flow, which are industry standards. So before we go any further, we're going to show you a quick little video here to start off the webinar.
85% fundamental, 15% technical. And I created the model because self-directed investors didn't really have the tools and the discipline to successfully manage their own money.
And that's created by famous analyst and entrepreneur Mark Chaikin.
I'm a big fan of Mark Chaikin, though, so it makes me nervous, Scott, because I like his metrics of looking at the market.
Mark Chaikin.
Mark Chaikin.
An expert known on Wall Street for developing computerized stock selection models.
Joining us is Mark Chaikin. He is the founder of Chaikin Stock Research. Mr. Chaikin, welcome.
Thank you, Barry, and welcome everybody. We've got a really exciting webinar for you today. Let's get into slideshow mode because we're going to be talking about an area of the market that I think is ready to start outperforming, which are small cap stocks. And we're going to look at my checklist for finding bullish and bearish stocks in general, and then zero in on some small cap opportunities, and you're going to be absolutely shocked by one of the examples in the webinar. So let's get started. In the next 45 minutes, we're going to go through my ultimate stock checklist, showing you how to find winning bullish and bearish stocks using the Chaikin Power Gauge rating, our multi-factor fundamental model, and Chaikin relative strength. And we're going to show you Chaikin Money Flow with a pattern that we've been teaching Wall Street professionals for over 30 years. That's so powerful that you'll walk away shaking your head, wondering how you didn't know it in the past. We're going to show you how to screen for bullish and bearish stocks, dramatically improve your timing with buy and sell signals, and most importantly, how to play good defense, avoid landmines that destroy portfolios. We had a pretty volatile day in the market today, with tech stocks taking it on the chin after making new highs earlier in the session. So very important to play good defense. Now, a little bit about me. Barry gave me a very kind introduction. 50 years on Wall Street. For 45 years, I've been using technical analysis, but always in conjunction with fundamental analysis. Problem is, I didn't have the time. Most people don't have the time to do the fundamental research themselves. So I was with the brokerage firms that had great fundamental research departments. But once I went off on my own, I didn't have that kind of a resource. So you have to depend on other people's research. And the Chaikin Power Gauge rating, as you'll see, is really a go-to rating that you can trust, that can really help you find winning and losing stocks. I headed the options department at a firm called Tucker Anthony and R.L. Day, where we had over 220 brokers and tens of thousands of options traders. And I'm going to share something with you. 95% of those traders lost money. And we're going to show you why and give you the tools you need to reverse those odds if you trade options. Along the way, I've been mentored by some of the smartest and most successful institutional investors. Some of them were colleagues and some of them were clients. And the reason that's important is that everything I learned from them in a 50-year career on Wall Street is reflected in the Chaikin Power Gauge rating. It's really the culmination of my life's work. And in this afternoon's webinar, I'm going to share the Power Gauge rating, how it's built and constructed, then show you how to use it to find winning stocks. That's really the key. And I like to start off with a question. Are you thinking about a bear market? Of the commentators on CNBC, and today we had Howard Marks, who's legendary value investor, talking about how the market looks like it's overvalued. So we like to start out with a poll. And Joe, if you'd put up the poll and tell people what we're looking at.
Yeah, so what you're seeing right now is a great time in the webinar where we're really trying to just get a pulse check for what's your outlook on the market. And I think you can see the options in front of you. We're already getting a pretty strong response, but current market view, as Mark was just alluding to, how do you feel about the market? Are you feeling more bullishly, a little uncertain, or perhaps starting to wait for the bearish market to eventually come that we've been waiting for so long? And we'll give that a few more moments. It looks like more than half of the people have already responded, so thank you very much. And we'll go ahead and wrap it up there, and let's take a look at the results. Mark?
Well, 42% are still bullish, 41% uncertain, 17% bearish. So this is a pretty optimistic group. We did a webinar Tuesday night. Going to share one of the screens from that webinar because it's so dramatic. There were many, many more bears. Now, the reason was that they came from a community that has turned bearish. It's a market letter writer and macro strategist, and he's obviously had a big influence on that community. So this is very interesting. Tonight's audience comes in the main from Barry Burns, and clearly he has not been influencing people to be bearish on the market, which I think is a good thing because I don't think we're yet there. So let's start out by looking at the market. And here we're looking at the SPY, the Select Spider Sector ETF, which mirrors the S&P 500, as you know. And I've included an intraday chart from Chaikin Analytics to show you that the market was cruising along until some comments from Howard Marks and Citicorp about some of the things that they see going forward. And the tech stocks started to take a tumble right after noon. The market did rally heading into the close, but you can see that we were already at the upper end of our rising channel and at our upper volatility band. So this is a place where the market normally runs into resistance. We're in the middle of earnings season. There's some amazing earnings that came out after the close. Amazon disappointed. Starbucks jumped up 5%. Now it's down. Expedia, a lot of stocks reported. There's going to be a lot of activity tomorrow, but the bottom line is very hard for the market to make any progress on a short-term basis. Earnings reports have come in wonderfully, just as we have been expecting in our weekly market letter, but you're up at a resistance level just under 2,500, where sellers are coming in even on good earnings reports. So we remain bullish on the market because the trend is your friend, and you can see on this chart that the trend is clearly up, and Chaikin money flow is very strong. This is an indicator that I created over 35 years ago. It's on every online brokerage platform. It's on stockcharts.com, Bloomberg, and Reuters for the professionals. And it's helped investors find winning stocks. And we're going to show you that very special pattern that we call a money flow sell alert as we get into the heart of the webinar. So if you're bearish, there is a way to use options to profit from a correction or protect your portfolio. So earlier today, when the S&P 500 was up, I use an options idea module that we built into Chaikin Analytics from a company called Options Play to find very quickly a bearish put spread, which has this very high ranking in the system. This is a probability-based options ideas capability. And believe it or not, this strategy, if the market jumps just 2.5%, can return 375% profit. So with a maximum risk of $126, and again, this is when the market was up just slightly, and we may be up again tomorrow, you could have put on a vertical put spread that said if the S&P drops just 2.5% down to 2420 by September 8th, you would have made almost 400% on your money or protected your portfolio against that drop. Now, if you're looking for a much bigger drop, if you're part of that 17 or 19% who are bearish, obviously you want to give yourself more room on the downside. But for shorter moves, the put spreads normally work out well, so that you can use options to protect your portfolio and to make money on the downside. And this is just one example of that. Now, one of the problems when we ask the question, what's sort of your biggest problem in your trading or your investing? And we always get the answer, there's just so much information and not enough time to process it. So we live in what I call the age of distraction, where between Facebook, Twitter, LinkedIn, email, and so forth, we're just inundated with information. And if you watch CNBC or the financial headlines, there's just so much data to process. Information overload is your biggest enemy because it's distraction. So our solution for the information overload problem is Chaikin Analytics, because we distill all the important data down into easy to use tools and metrics that can keep you on the right side of the market. And along the way, we've been fortunate that it's been adopted by some of the biggest institutional investors like Paulson Hedge Fund and Fidelity, but also by people who've really embraced Chaikin Analytics in their advisory services. Benziga, as you'll see at the end of the webinar, a very big fan of Chaikin Analytics, Forbes magazine, Barron's, and so forth. So a lot of validation from the media and from some large institutions, but today's webinar is all about how you can use these very disciplined tools to make more money trading and investing. So how does Chaikin Analytics improve your trading? We improve your trading by giving you a directional edge, by combining fundamentals with technicals into a multi-factor quantitative model, and then providing 6 pairs of buy and sell signals to improve your exits and entries. Now, the directional edge is what those losing options traders at Tucker Anthony didn't understand. That to trade options successfully, you need to know where the stock is going. You need that directional edge, but for most people, it's purely technical. For Chaikin Analytics and our own methodology, it's a combination of fundamentals and technicals. Now, we've developed this pyramid to sort of encapsulate the Chaikin methodology, because successful trading and investing demands a disciplined methodology. If you don't have discipline and focus, you cannot make money trading or investing in the stock market. So at the top of the pyramid is our Chaikin Power Gauge rating. It's displayed as a gauge. We also think that industry group trends are very important. Semiconductor stocks, for instance, have been strong on the upside. Auto parts stocks weak on the downside. So we're going to give you a little smattering of how industry groups and knowing whether they're likely to go up or down can help you in your trading. At the bottom of the pyramid, just 2 technical indicators, Chaikin money flow and Chaikin relative strength. They're very complementary to the power gauge rating, so you've got this combination of fundamentals and technicals. And in the middle, right in the sweet spot, are the buy and sell signals that are so critical if you're an options trader or a swing trader. But even as a longer term investor, they give you wonderful entry points, as you'll see in a trending stock. So let's start out with a very concrete example. We have a pattern that we call classic Chaikin bulls. 3 components to that pattern, so simple. Power gauge rating is bullish, meaning that the fundamentals are favorable for that stock. Stock is outperforming the market, and Chaikin money flow is strong, telling us that the institutions are buying the stock. And here's an example. Applied Materials, along with Lam Research, semiconductor equipment manufacturer who has been leading the market higher. Look at the bottom of this one-year chart. That's the power gauge rating shown as a ribbon that goes from red to yellow to green. Now, what's missing here? There's no red because the power gauge rating has been bullish or neutral on Applied Materials for well over a year. Now, right above that is our proprietary relative strength indicator. When it's green, it means that the stock is outperforming the market over the last 6 months. Applied Materials has been outperforming the market. And then here's Chaikin money flow, which shows you that the institutions have been aggressively buying the stock. It normally fluctuates as it did in the October-January period from red to green as the stock meanders within a short-term trading range. But when it shows persistency of accumulation, it means the institutions are buying the dips. And then finally, we see one example of our 6 pairs of buy and sell signals. We call this a relative strength buy signal. This is so simple. A stock is outperforming the market, goes under its 21-day average, and then rises back above the 21-day average, triggering the relative strength buy signal. The nice thing about this signal is it works about 70% of the time, and the time horizon is about 4 to 8 weeks. So you can use it for swing trading. You can use it to establish a longer-term options position, ride through 1 or 2 dips in the stock and maximize your potential. And then finally, something that's very near and dear to my heart, earnings surprises. We color code each of the earnings report icons, EPS, either red, gray, or green, depending on whether a stock outperformed or underperformed. So you can see on this chart that Applied Materials, which is going to report earnings on August 17th, has a green earnings alert exclamation point, meaning that analysts are raising their estimates and the stock is likely to report another positive earnings surprise, has a history of positive earnings surprises, and you'll see in a moment why that's so important. Now, going back to relative strength, you could go to William O'Neill, Investors Business Daily, and get relative strength as a number from 1 to 99. But to me, numbers add to the information overload problem. I prefer to look at pictures, color code them so it's instantly available. Now, can you see yourself looking at this chart and forming a mental picture of whether this stock is likely to go up or down? If you can, type a big P into the question box, please. And I see we've got a little bit of uptake on the whole concept. Power gauge rating is green, relative strength is green, money flow is green. You're looking for a buy signal. Can you see yourself trading with just such a simple methodology? And I see we're starting to get a lot of yeses in the question box. So if you can, then you're going to enjoy the rest of the webinar even more because we're going to drill down with more examples, reinforce what we're looking at. Now, one thing that's very important is when you have a methodology that's disciplined, you have to be able to find those stocks fast and easily. So we have a screener built into Chaikin Analytics. I know some of the online websites like FinViz have screeners. What's unique about our screener, and here I'm screening for classic bulls, is that we enable you to screen based on the power gauge rating and every one of the 20 factors within the model, plus our proprietary technicals like money flow and relative strength, and limit the universe. So in this case, I was looking at large and mid-cap stocks. This is about 2 weeks ago. From the Russell 3000 with very bullish ratings, narrowed it down to 17 stocks. Just 17. This is what you need to do to cut through the clutter of information overload so you can find winning stocks fast and easily. Now, the opposite of the classic Chaikin bear pattern is of the bull is the classic Chaikin bear. Power gauge rating is bearish, meaning that the stock's fundamentals are negative. Could be valuations, could be technicals, could be earnings, or some combination of that. Could be that insiders are not buying their own stock. Stock is underperforming the market, and Chaikin money flow is red, not green, telling you that the institutions are selling the stock. So here's our poster child for classic Chaikin bear, Under Armour. Now, how many of you know Under Armour as a apparel manufacturer, sneaker company, and many Wall Street analysts have loved the stock. Hedge funds were heavily invested in the stock when it was here up at 40 back in the fall of 2016, but the power gauge rating was already bearish. And look at the institutions selling the stock. Now, how do we know the institutions were selling? Because Chaikin money flow was red, not green, consistently for 8 months. And the stock was underperforming the market. So the power gauge gives you your directional edge. Relative strength indicator tells you whether the market agrees with you. And this is a really important concept. No matter how good a fundamental model is or fundamental research, if the market doesn't agree with you, the market always wins. My good friend Marty Zweig, who sadly passed on too soon, said it so succinctly: to make money in the market, watch the Fed and listen to the market, because the market always wins. Nobody, no guru, no model, no high-profile money manager is bigger than the market. So what's interesting about Under Armour is the stock has dropped from 42 to a low of about 18. Chaikin power gauge would have discouraged you from bottom fishing. These relative strength sell signals would have gotten you into some really nice short trades. This one came right ahead of a negative earnings surprise with a big gap down. But 2 days ago, Deutsche Bank downgraded Under Armour from buy to sell. With the stock down from 42 to 20, they threw in the towel. That's why you need independent tools. You can't be dependent on Wall Street research. As good as these firms are at times, they're very slow to respond to changing conditions. And you need your own tools in order to trade successfully. Now, for a lot of people on this webinar, those tools are technical analysis tools. In fact, if you use technical analysis primarily, please type a TA into the question box. And Joe, let me know what you're seeing, please, because I can't see the questions on my screen.
Mm-hmm. Yeah, let's see. I see a few TAs coming through right now. Probably about a dozen or so already.
Well, what we find is that most traders, swing traders and options traders, are using just technical analysis. That doesn't work. You're only seeing a small part of the picture. If you have something like the Chaikin power gauge that does the heavy lifting on 5,000 stocks, then you can combine fundamentals with technicals very easily. So we've shown you some examples of the power gauge. Now let's dive into what it's really all about. The power gauge is output as a display that looks very much like the gas gauge on your car. Fluctuates from very bearish to very bullish. But this simple display is very powerful. Please don't confuse simple with simplistic. As I like to say, the Chaikin power gauge is like a Chevrolet with a Ferrari engine under the hood. There's a lot going on, a lot of number crunching going on under the hood. And the power gauge rating can be your GPS during earnings season. Now, John Carter, who is one of the best pure traders that I've ever met, got introduced to the Chaikin power gauge rating about 1.5 years ago. And he sent us an email saying, wow, you've got an objective, awesome meter for stocks. I know there are a lot of hyped up tools out there, but when I find something interesting, I like to let people know about it. So you can imagine that a single tool that combines 20 technical and fundamental factors to anticipate a stock's potential got my attention. It's called the Chaikin power gauge rating. And at first glance, I thought that this looked like an objective, awesome meter for stocks. So what got John so excited about the Chaikin power gauge? Well, first of all, there are 4 primary factors: financials, earnings, technicals, and expert opinions. And within each of those, there are 5 sub-factors. And these factors are what I learned from my institutional colleagues. Successful money managers look at every day. So this model is not a theoretical model from some newly minted PhD at MIT throwing digital spaghetti at the wall to see what sticks. That got us long-term capital collapse in 1998 and the financial collapse of '08. This model works because it's based on how Wall Street works. The financial metrics are 35% of the model. They don't change very much, but price to sales and free cash flow are what the great value investors like Warren Buffett and Seth Klarman and Howard Marks, who spook the market today, look at every day. But along with these financial metrics, which people would call value metrics, we have some more sensitive shorter term. So I've boxed two of them: earnings surprise, which leads to earnings estimate revisions. This is one of the things that a mentor of mine at Drexel Burnham taught me in the mid-'80s. He did the original research on earnings surprises. Now, what are earnings surprises? Well, you're seeing them tonight. Intel pops on earnings beat. Amazon drops on disappointing earnings. When companies report earnings, they either meet, beat, or disappoint Wall Street analysts. Now, when a company disappoints, it will normally lead analysts to lower their earnings estimates. Or if they exceed on the upside, they'll raise their estimates. Earnings estimate revisions are the single biggest short-term driver of stock price movement. That's why there's so much volatility during earnings season, but particularly in the small cap space, where there are very few analysts following a lot of these stocks. If a small cap stock reports a positive earnings surprise, it sort of filters into the marketplace slowly, although sometimes it just pops, as you'll see in a minute. So we've combined value factors with growth and shorter term, more sensitive factors like insider buying. And when we look at small cap stocks, insider buying is absolutely a tip off, a tell, as they say in poker, because small cap companies typically have a larger percentage of insider ownership. So if an officer or director of a small cap company takes out his checkbook and buys more of his own stock, what is he telling us? He's telling us that he sees a window of 12 to 18 months where his company is likely to do very well and he wants to own more of that stock. Now, insiders typically have to hold for 12 months or longer, otherwise they've got a lot of explaining to do to the SEC. So that's just another example of how robust this model is. It incorporates the factors that successful investors look at, but it's an eclectic model. It's not just a value model or a growth model. It finds a lot of different ways to like or dislike a stock. And then the other one I boxed is industry group relative strength. I mentioned that earlier on. You'll see two really good examples of that. Actually three, one on the upside and two on the downside. So how has the model performed? Well, in 2016, using the Russell 3000 as a universe, the very bullish stocks were up 32%. Now, I think everybody on this webinar would probably be pretty happy to have seen their account go up 32% last year. The very bearish stocks were up only 9.5%. It's that spread between 9.5 and 32 that we're going to teach you about on this webinar. How to capture that spread is the difference between making and losing money, because in 2015, when small cap stocks were in a bear market, when the energy complex was in a bear market, the average very bearish stock in the Chaikin power gauge methodology in the Russell 3000 was down 17%. The average bullish stock was flat. So you've got to avoid the bearish stocks, whether you're trading or investing. If you're investing from the long side, get them out of your portfolio. If you're trading, these are put candidates, not swing trade or call candidates. So very important to realize that. Now, one final proof point, and then we're going to really dig into some meaty examples. We've partnered with two very large financial institutions. 3 years ago, Nasdaq came to us and asked us to create 3 Nasdaq Chaikin indexes based on their large cap, their small cap, and their dividend achiever index. They did their homework and validated our claims that the power gauge rating has predictive power 3 to 6 to 12 months out. And on April 1st of 2014, we launched 3 Nasdaq Chaikin power indexes. So they've got a 3-year and 3-month real-time track record. But no money was in there, just an index like the S&P or the triple Qs. But what happened was these 3-year performance record was so good. And by the way, these portfolios don't change for a year. So this is like a buy and hold portfolio. In the case of the small cap, we keyed it to the Nasdaq 1500, which is like the Russell 2000. And every year there are about 225 to 300 stocks in the index, Nasdaq Chaikin Small Cap Index. The performance was so good in the real-time 3-year track record with 3 reconstitutions, as they're called, that New York Life Insurance, largest mutual insurance company in America's mainstay investment subsidiary and their Index IQ ETF subsidiary, licensed them in February, registered the indexes with the SEC as the basis of exchange traded funds. And 2 months ago, the first exchange traded fund was launched. It's the Nasdaq, based on the Nasdaq Chaikin Index. It's called the IQ Chaikin Small Cap ETF. This is not a recommendation to buy it. Nothing on this webinar should be construed as a recommendation. But in the 2 months that it's been trading, it's got $150 million in assets. It's the 3rd most successful exchange traded fund launch of 2017 out of 89 new ETFs. Now, what got New York Life so excited? In the 3 years of the real-time track record from April 1st of 14 through March 31st of 17, the Russell 2000 index, the IWM, was up 22%. The Nasdaq Chaikin Small Cap Index was up 44%. 44%, double the performance. And you had a bear market in small caps in the middle of that period. Using the same discipline methodology that we're talking about on this webinar, we've created indexes, passive indexes, that can outperform the market. Imagine as a trader what you can do with these same tools, where you have the freedom to take profits on some of these stocks when they spike up, as we'll see in a minute. So enough of the proof points. My objective here is that you really pay attention and believe that what we're teaching you on this webinar can help you become a better trader or an investor. So we're going to look at 3 patterns that sort of encapsulate everything we do at Chaikin, and then some real serious examples. The first pattern we call the dynamic duo. It's a combination of fundamentals and technicals, the Chaikin power gauge rating and Chaikin relative strength. And the dynamic duo, for the 50 years that I've been in the market, finds big winners and big losers. It's a very powerful way to zero in on the stocks that you want to own or trade. And superior returns come from stocks that outperform the market, which is why relative strength is so important. But there's one caveat. Relative strength can stand alone as a bullish or a bearish indicator. When a stock is moving up, not supported by fundamentals, it's what's known as a momentum stock. And there are a lot of traders and investors who love these momentum stocks. But there's something really important to understand. If you're long a momentum stock where the fundamentals don't support it, you're on a high wire without a safety net. And as soon as something goes wrong, the fall is very painful, both financially and psychologically, because very hard to deal with. And we've seen this over and over again in the 6 years that Chaikin Analytics power gauge rating has been available. Stocks run up like the 3D printing stocks or the cloud computing stocks or even Tesla today without fundamentals supporting them. And when they fall off the cliff, it's really painful. So let's look at a couple of examples. Here's an example of dynamic duo on the upside. WellCare Health, WCG. This is a 1-year chart. Again, power gauge ribbon at the bottom, relative strength above it. So there's your dynamic duo the market agrees with the model. You buy a stock like this, and Marty Zweig would have loved you. And then Chaikin money flow tells you whether the institutions are accumulating the stock, which in the last 4 months has been making new highs with heavy institutional buying. And the way we know that is that the money flow never goes below the zero line, never goes red here from April through July. Now, on the downside, the dynamic duo is even more powerful. So here's TripAdvisor. Power gauge rating has been bearish for over a year, and the stock's been underperforming the market since last August. And the stock has dropped from 70 all the way down to 35. 50% drop in a market making a new all-time high. Along the way, you got what we call our oversold buy, overbought sell signals. This pattern is even simpler than the relative strength signals, but typically these trades last 5 to 10 trading days. So they're more geared to shorter term trading. How do you get an overbought sell signal? Power gauge is bearish. Stock gets overbought and makes a new 8-day high. These signals work about 2/3 of the time, and their time framework is ideal for 5 to 10 trading days. So if you're a swing trader who likes shorter term holding period or an options trader, these are ideal. So this is TripAdvisor now. Let's go back 2 years and take a look at a very similar stock, Yelp, which is in a very similar industry group: internet, travel, restaurants, advice, and ratings. Yelp had a bearish power gauge rating in 2014 into 2015. The stock was trading at about 60, underperforming the market, institutions selling. There are your overbought sell signals. And right here where you see that red arrow, in my weekly market insights newsletter, I have a bullish or bearish stock of the week. I made Yelp my bearish stock of the week, knowing that they were due to report earnings in about a week. The stock was trading at 35, down from 60, but there had been a history of negative earnings surprises. You can see them on the charts. Every time they reported a negative earnings surprise, the stock gapped down. Patterns repeat over and over and over again on Wall Street. So what happened? They reported a negative earnings surprise, and the stock dropped from 35 all the way to 22, and then ultimately 2 weeks later, $20. And we got this testimonial from Mike T. This is 2 years ago. Netted $17,408 profit this morning. I found more success in the past 2 weeks using Chaikin than I've had the rest of the year. I had the biggest winner of the year today on Yelp earnings based on Mark's bearish play of the week. Risked 7,000, netted 17,000. Now, Mike actually sent us his trade blotter. I think this is probably from Interactive Brokers. And it looks like he was a sophisticated options trader because he put on a lot of different strike prices and expiration dates. But the bottom line is he made money. Now, this was before we had options play integrated. Now you can find these trades as easily as Mike did if you have a directional edge and an opinion on the stock. Now, why am I showing you an example that goes back 2 years? And there'll be another one. Because this methodology has worked consistently since we launched the first product in January of 2011, over 6.5 years, where people have been using the Chaikin power gauge rating to find winning stocks on both the long and the short side. It's not just a Johnny-come-lately optimized approach that's based on what's worked over the last 3 to 6 months. It's based on my whole life's work of 50 years. I've used some of these techniques for 50 years, like relative strength, earnings surprises since the mid-'80s, Chaikin money flow since the early '80s. So powerful techniques where you can find winning trades. Now, the second concept I want to talk about is what I really consider the key to keeping profits in the market, and that's spotting personality changes. Now, why is that so important? Because on Wall Street, traders and investors tend to put their feet in cement. Just like the analysts were stubborn on Under Armour and rode it all the way down at Deutsche Bank, particularly where they threw in the towel after a 50% drop, You need to know when a stock is changing character. And we make it very simple. What is a personality change? Well, a bearish personality change happens when a stock that's been outperforming the market starts to underperform the market. And we make it so simple. Relative strength goes from green to red. Now, can you see how simple that is? Well, let me show you an example. Anthem Health in the medical care Blue Cross Blue Shield provider business was underperforming the market leading up to the presidential election. How do we know that? Here's your relative strength indicator, and it's red. And the power gauge was neutral. Donald Trump won. The healthcare stocks spiked up. The power gauge rating actually turned bullish just before that. And then the stock started outperforming the market. If you were looking for that bullish personality change, and then you said, well, are the institutions doing the buying here? Well, they sure were. Here's your Chaikin money flow measuring institutional buying and selling, and there are your sell signals, rather your buy signals, the oversold buy signals for your entry points. So that's an example of a bullish personality change. Now, Anthem reported disappointing earnings yesterday, and it looks like the stock is under pressure for at least a week or so as the sellers sort of air themselves out. But we don't know that the game is over yet. Now, here's an example of a bearish personality change. This is Hertz, the rent-a-car company, and it peaked up here at the $50 level. It was very strong. There's an example of a momentum stock where the earnings just didn't support the price movement. Then the institutions started selling it. You had a negative earnings surprise. The power gauge turned bearish in late September with the stock trading at about 35. And then with the stock at about 25, you got a bearish personality change. That bearish personality change was the last nail in the coffin for Hertz because it went from 25 all the way down to $9. So I have a saying that it's never too late to sell a stock where everything's lined up against it. Power gauge bearish, underperforming the market, institutional selling, and then you wait for that, in this case, relative strength sell signal to put on a swing trade or an options trade and make sure that this stock is not in your 401k plan. Now, 6 pairs of buy and sell signals. You can go to our website, whether you're a subscriber or a visitor, and we explain the methodology behind each of those 6 pairs of buy and sell signals. There's some secret sauce in there that we don't disclose, but the general concept is so simple. I've already explained the relative strength sell signal. Now, the third concept I want to share with you is what we call the secret trade that 95% of traders don't see. It's a bearish money flow sell alert. And it happens because institutions like to fly under the radar screen, thus the stealth bomber picture on the screen. So what is a money flow sell alert? It happens when a stock makes a new high or equals an old high near the upper volatility band. In this case, for the technicians out there, these are Keltner channels, which are more of an intermediate term band than the Bollinger bands. And when a stock makes a new high, money flow should go green, indicating that institutions are behind the rally. When money flow stays red and you make or equal an old high near that upper volatility band, that's a money flow sell alert. It's the only technique I've ever discovered in 50 years on Wall Street that can enable you to get out of a stock at or near its all-time high with the confidence that you're not leaving a lot on the table. Now, you could go short there. In this case, the power gauge was neutral. But here's another example of a momentum stock where the fundamentals didn't support it. Now, subsequent to that money flow sell alert, you got a negative earnings surprise, and the stock saw the power gauge go bearish. You had a bearish personality change with institutions now selling advanced auto parts whenever they could. And then, interestingly, before this latest earnings report, back in May, the stock rallied and triggered an overbought sell signal by making an 8-day high 2 days before what turned out to be a negative earnings surprise, where the stock dropped from 150 to 130. Imagine what a put trade would have looked like, how that put trade would have improved your bottom line for the week, the month, the year. Can you picture yourself buying a put option with confidence when everything is lined up? Now, ultimately, the stock dropped all the way to 100 in sympathy with O'Reilly Auto and AutoZone, and I'll show you how we handled that in April. Now, the reverse is true. Stocks that are under persistent accumulation are good buys on weakness. Typically, they won't be making new 52-week lows, so you have to treat this a little differently. You want to buy them when they get oversold or trigger, in this case, an oversold buy signal. And look how wonderfully these two signals worked in KB Homes, with a third one in the making here. When the money flow is green and you get oversold, and our oversold indicator is a cross between an MACD and a stochastic. It's a proprietary indicator, but you could do this with RSI, stochastic. The key is the power gauge is bullish. That's a prerequisite. Money flow is very strong, and you get oversold. Typically that happens near the 21-day average. These are high probability swing trades. It's a great time to put this stock in your 401k plan because the signals are disciplined. So what we've been looking at is what Warren Buffett calls the ideal setup. He says famously, they don't call balls and strikes on Wall Street, so you don't have to swing at every pitch. You can wait for your pitch. He calls that the fat pitch. We call it the ideal setup. The final piece of that, when you have the power gauge, relative strength, and money flow strong, are the entry points. That's why we have 6 pairs of buy and sell signals. Now, just as with the screener that finds the classic bulls, you have to have a way to know that a stock has triggered a signal. So whatever system you're using, you have to have a very methodical way to monitor those signals, whether you're using candlestick patterns or MACD or moving average crosses. You've got to have a way to find them. So I took a dashboard alert from a webinar I did in February, because we have a dashboard in our iPad product and our desktop product. And in this list of stocks that I follow, called My Stocks, KBH triggered an oversold buy at 16 on its way to 24. And Darden Restaurants, in a group that we liked at the time, triggered a reversal buy at a price of 73.44. Let's see how that worked out. 73.44 back here in February when we did that webinar, went all the way to 96. And notice that at 96, the money flow was red, not green. There's another example of the money flow sell alert. Now the stock is broken down technically, so we're not interested on the long side anymore. Now let's go back a year and a half, just like we did with Yelp, to our dashboard alerts on a webinar that I did on January 28th of 16. Amazon was trading at 583. It had triggered a money flow sell signal. And in our weekly market insights on January 23rd, I said buy puts on Amazon ahead of Thursday's earnings report. Why did I say that? Because the power gauge was bearish, and stocks with a bearish power gauge rating are twice as likely to report a negative earnings surprise. So what happened? Amazon reported a negative earnings surprise. The stock dropped 12% almost instantly. And there's where that sell signal came in, about 595, and the stock bottomed out at 470. But look what happened prior to that sell signal. Money flow sell alert with Amazon at 680. You could have gotten Amazon off your blotter, bought put options with a fair degree of confidence at 680 back in 2016. Now I know Amazon's gone to 1,000, but markets are volatile, and that's part of the reason I stress the fact that you've got to monitor personality changes. You can't put your feet in cement. Just because you had a successful trade on Amazon on the short side doesn't mean that you can't be nimble enough to get back into it if everything starts to line up. Now, we got this testimonial in February of 2016 from Harry S. I'm up over $17,000 in 2 weeks. You changed my life. I'm up with my options trade on Google, Amazon, and Priceline. It's all from checking the Chaikin Power Gauge rating. Chaikin Analytics is a godsend. So again, the point is that this isn't a fly-by-night optimized approach to trading or investing. It's been working for Chaikin Analytics clients for over 6 years. Now, one of the themes of the webinar is how to find small cap winners. So let's zero in on how I find the small cap stocks that we recommend in our weekly market letter. On April 16th of this year, we recommended 2 small cap semiconductor stocks as our bullish stocks of the week, Excelis and Integris. Integris went up about 15%, but Excelis was the real winner. It went from $18 all the way to $26, and everything lined up. This is the ideal setup. Power gauge bullish, outperforming the market, money flow very strong, and there's your entry point, your oversold buy signal, the new 8-day low. That's when I recommended it. So the method works. Here's another example. In my June 9th Market Insights, I made this small cap semiconductor stock, Applied Optoelectronics, my bullish stock of the week. It was trading at about 62, but it had just spiked down. I said, buy it at 60. And notice the money flow stayed strong on the dip, power gauge bullish, outperforming the market. Then you got a relative strength buy signal. The stock has gone from 60 to a high of 102 today in less than 2 months, in 6 weeks. Over a 65% gain in less than 2 weeks. Now, in all candor, I said in my market letter a week and a half ago with the stock at 84 that I would take money off the table. A 40% gain in a month seemed like a good trade to me. It's just continued higher, showing you that the trend is your friend. It continued on from 84 all the way to 102. Then it reversed today when the market reversed. So that's some examples of small cap stocks that we recommended in our weekly market insights. Now, how do I find them? Well, I used our screeners. So here's a screen from a webinar that we did just 2 days ago, Tuesday night. I took the Russell 3000, looked for stocks with a very bullish Chaikin Power Gauge rating, and I wanted that earnings surprise factor that we talked about earlier to be strong, because I want stocks that are going to report or likely to report positive earnings surprises. So that's why that's one of the factors in the model. I also required that the stock be above its 21-day exponential average with high 3-month relative strength. And then I made sure that we're only looking at small cap stocks. With that screen that I did midday on Tuesday this week, 28 stocks showed up, including Excelis, which we've just seen a chart of. One of those stocks was Blucora, trading at 21.10. Blucora reported earnings this morning before the opening. The stock was up 12% today. This is a stock that we zeroed in on Tuesday on a big webinar with about 700 people in attendance. This is what a disciplined methodology can do for you. Now, one of the people here at Chaikin Analytics actually bought Blucora yesterday ahead of the earnings report. Just think about how happy he is today and how happy you would be if you would use this disciplined methodology in a stock that's got a history of positive earnings surprises. This is what George Douglas taught me at Drexel. Earnings surprises come in bunches. There's never just one of them. And especially in small cap stocks where they're underfollowed by analysts, you've got a real edge when you're using a disciplined methodology that zeroes in on stocks with a history of earnings surprise. So that's the way I find them, and you can find them just as easily. Now, playing good defense is also critical because it protects you in both bull and bear markets. So let's talk about defense for a little bit. How do you play good defense? Now, Herb Greenberg used to write for TheStreet.com and had a segment on CNBC. He went off the air for about 2 years because he started a short sale service for hedge funds. But he wrote a column for TheStreet.com about 2.5 years ago where he said, it's the stocks you don't own that matter. Now, what did he mean by that? What he meant was you can reduce risk by avoiding mistakes, by avoiding stocks in weak industry groups, by knowing what stocks not to buy, by not averaging down in an Under Armour or a Kinder Morgan, as we'll see in a moment, when they were killing the energy stocks. You can improve your performance by eliminating potential losers from your portfolio. And finally, you can use put options to protect your portfolio, as we saw early on with the Spider vertical put spread. So how does Chaikin help you make money in a bear market? Well, this is what a bear market looks like in stocks. This chart was developed by a market technician named Richard Wyckoff over 90 years ago. How many people on the webinar are familiar with Richard Wyckoff's work? If you do, please type a big W in the question box. And I see that there are a lot of people who are familiar. His techniques are still taught today. Golden Gate University, which teaches some very cutting edge finance courses, teaches a whole semester course on the Wyckoff methodology. So over 90 years ago, Richard Wyckoff developed an idealized pattern of the way stocks go up and down. You get a distribution phase. We saw that in applied advanced auto parts, AAP. You break down, you rally to the breakdown level. Part of the reason that the Chaikin methodology works is because unwittingly we're mirroring with these signals and with our relative strength the Wyckoff approach. And the reason the Wyckoff approach has worked for almost 100 years is it's based on human nature, on the pendulum swings between fear and greed. So human nature hasn't changed for 100 years. I've been doing it for 50 years and I've seen the same patterns over and over and over again. So let's look at what a bear market looks like. Now, it wasn't easy to find a bear market because since March of 2009, we've been in a bull market. But in the middle of that bull market, energy had its own bear market. We're looking here at the XLE, the Select Spider Sector Energy ETF. So this represents all of the large cap energy stocks in the S&P 500. The XLE topped out at $100 in August of 2014, and by January of 2016, 18 months later, it was trading at 50. So it dropped 50%. That's a bear market. That's what it looks like. That's what it feels like. Along the way, bearish personality change in the XLE. Now, what was going on in individual energy stocks? Well, most of them some starting in January, even before the group topped out, or the sector, Diamond Offshore and Transocean topped out in January of 14. But big cap energy stocks and the fracking stocks like Range Resources and Pioneer and Schlumberger started going down in August and September of 14 and continued lower. One stock that sort of levitated was Kinder Morgan, 20% dividend. They were rolling up all their master limited partnerships. And this stock held on till early 15, whereas the rest of the energy stocks were down. Kinder Morgan miraculously traded above 40. But then when Wall Street turned sour on it, they saw that they were going to have to cut their dividend. The stock dropped from 42 all the way down to 11 or 10.5, over 75%. Now, here's what Kinder Morgan looked like on a one-year chart back in 2015. The power gauge turned bearish a bit early. In February, March, the stock rallied to its final high. And then you got a bearish personality change and the power gauge turned bearish. That's why it's so important to spot these personality changes. Stock was trading at $40 at that point on the way down to $11. And along the way, the institutions started selling. They got wise to what was going on. And you got these wonderful overbought sell signals. Remember what I said earlier when we were looking at Hertz. It's never too late to sell a stock where everything is lined up against you. So if you were late to the party and Kinder Morgan was still in your portfolio because you love that 20% dividend, which ultimately got cut, there's your opportunity. It's like a poke in the eye to sell the stock at 32 and again at 32, or even at 24 on the way down to $10, $11. Now it's turned around. Warren Buffett has bought it. Hedge funds own it. They said the other day when they reported earnings that they're going to raise their dividend. But the bottom line is, wouldn't you be pleased to have been out of the stock at 40? Imagine how much better you would have slept, not worrying about whether the stock was going to bottom out at 30 and you should stay with it or sell it and so forth. Follow the discipline of this easy 3-step methodology with the signals, and you take a lot of the sleepless nights and worry out of trading. Now, what's going on in energy today? Well, interestingly, starting in February, we had a bearish personality change in the XLE yet again. This is a current chart. That was a 5-year chart. And the XLE has dropped from 73 all the way down to 63. So it's had a 15% decline in a period when the market is making new 52-week highs. So you wanted to avoid the energy stocks. You can see the selling in the XLE. That's traders and institutions getting out of energy, underperforming the market. So what you're looking for at that point are stocks like Schlumberger with a bearish power gauge rating that are underperforming the market with the money flow negative. There are your 3 indicators lined up in that ideal setup. And then you get an overbought sell signal just about a week and a half ahead of earnings, and you get a negative earnings surprise, and the stock drops from 76 all the way down to 70 and continues on after another sell signal to bottom out at 64. Now, you had an earnings report just a week ago, last Friday. The stock spiked up, and now it's back to the downside again. Just imagine how much better your trading would be if you had pulled the trigger on that trade. And part of what we're talking about is to give you the confidence to pull the trigger, because so often in trading, we have the ideal setup with the sell signal and we don't pull the trigger. I've done it. Everybody on this webinar has done it. But if you have a set of tools that you believe in, you know why you're putting that trade on, makes it a lot easier to pull the trigger. Now we're going to end the webinar with the concept of earnings season and options. We're in the middle of earnings season. A lot of people are reluctant to trade during earnings season because of the volatility. But remember early on I said that the Chaikin power gauge rating could be your GPS during earnings season, because that volatility represents opportunity. So a lot of speculation in the media around earnings, knowing if a stock will meet, beat, or disappoint is absolutely critical. That's your directional edge. So you can find winning options trades on stocks with confidence using our options play module. So we already saw Blucora, BCOR, where you got a positive earnings surprise this morning and the stock was up 12%. Let's look at a couple of other examples. And I said that industry groups are so important. We've looked at some semiconductor stocks because the semiconductor stocks have been on fire until this morning when everybody decided to take profits at the same time. But a week before I recommended those 2 small cap semiconductor stocks to buy, in my weekly market insights, I said, here are 3 auto parts retailers to sell on strength: Advanced Auto Parts, AutoZone, and O'Reilly Auto. The group was weak. The stocks all had bearish ratings. They were at or near their 52-week lows. So I said, sell them on rallies of 2 to 4%, because I hate buying puts or selling short on a stock that's at a new 52-week low. I like to see a little bit of a relief rally. So we got that in Advanced Auto Parts. And then there was a sell signal and a negative earnings surprise. And as we saw earlier, the stock dropped from 150 to 100. Now, again, as with the signals and the classic bulls and bears, you need a way to find these stocks, to zero in on them. So every week in my weekly market insights, we have a feature called upcoming earnings reports. So we show you which stocks are due to report on a given day in the coming week, but more importantly, whether they have a bullish or a bearish power gauge rating. So in a webinar that I did in the week of April 24th, we zeroed in on O'Reilly, which we had just put out a sell recommendation on, and Helmerich and Payne in that weak energy group. And then a month later, we zeroed in on Advanced Auto Parts, which was due to report. Again, the bearish rating is your directional edge. And then Best Buy, which had a bullish power gauge rating. So let's see how those trades worked out. O'Reilly, this is the spot where we said sell it on strength, short-term strength. It rallied from 240 to 260, so it rallied a little more than that, 4%. Then it gave a sell signal, negative earnings surprise. The stock dropped from 260 initially to 230. Miraculously, it still had some friends and it rallied. But ultimately, when they reported negative same-store sales for June, just 2.5 weeks ago, the stock dropped from 220 all the way down to 170. Remember, you could have shorted it up here on the sell signal between 250 and 260. So very powerful trade, and if you stuck with it, obviously very successful trade. Now, what happened to Helmerich and Payne? They reported a negative earnings surprise, and the stock dropped from 67 all the way down to 50. There's your negative earnings surprise. There's the sell signal ahead of that. Now, patterns repeat on Wall Street, as I said earlier. So guess what happened today? Helmerich and Payne reported earnings again. And when I took this chart at about 1 o'clock, it was down 6% on the day, again, approaching a new 52-week low. Patterns repeat over and over and over again. Earnings surprises, price patterns. If everything is lined up against you, on the downside, you want to be short that stock. And on the upside, you want to find a way to get active on the long side. Now, here's Advanced Auto Parts. We saw the money flow sell alert, bearish personality change, institutional selling. We got an overbought sell signal just 2 days ahead of that negative earnings surprise where the stock dropped from 150 to 120 and continued all the way down to 100 in sympathy with O'Reilly. Group weakness. If an industry group is weak, almost every stock in the group is going to be dragged down. So we got this testimonial, 10x return in 5 days from GC. In the 5 business days that I've been using Chaikin Analytics, I've paid for the subscription over tenfold. These initial results are nothing short of outstanding. Please extend my thanks to the entire Chaikin team. And team is really the key message here. My wife, Sandy, and I started this company in 2009. We're now 28 people in Philadelphia dedicated to our clients' trading and investment success. So we've built a very, very dedicated team, work with our clients, educate them as to how to use the system. And this is an example of how quickly you can master this very simple methodology. So let's look at what was in this week's Market Insights. These were the stocks that were due to report earnings this week, and I've singled out Helmerich and Payne, which we've already looked at. Starbucks had a bearish rating. I had made that my bearish stock of the week 2 weeks ago. They announced an acquisition this morning of a Chinese company. That was my tip-off, the Chinese subsidiary, that something wasn't right with Amazon because they were due to report earnings after the close. Well, guess what? They reported flat earnings based on expectations, but the corporate guidance was terrible. The stock initially spiked up to 62. It's now trading at 57.5. It actually spiked up to 63. That's why I made it my bearish stock of the week. But Seagate, the disk drive manufacturer, also had a bearish rating, as did Chipotle and Boeing. So let's see how those worked out. Seagate reported earnings on Tuesday before the opening, and the stock spiked down because they were disappointing. It spiked down 20% and then rallied a bit midday. So if you're following that discipline methodology, there's your sell signal just a week ahead of that earnings report with the stock at about 38, and it bottomed out at 32. Bearish personality change, these patterns just keep repeating. And here's Boeing. Everything's lined up. Bullish power gauge rating, outperforming the market, persistent buying. You got an oversold buy signal here at the lower band. Stock was trading at about 178. And this morning, they reported a positive earnings surprise, and the stock spiked up to a new all-time high of 240 when I pulled this chart. It had been trading at 210. I guess that was 2 days ago, because you had the gap from 210 all the way up to 240. So these are just current examples of stocks with bullish ratings reporting positive earnings surprises, stocks with bearish ratings like Helmer Payne, Starbucks, Seagate reporting negative earnings surprises. Now, I'm going to end the webinar with our newest innovation. And because of this powerful idea generating engine, we just won the Benziga FinTech Award in May for Best Trading Ideas Platform. There were 19 other competitors in that category. Now, why did the judges give us that award? Because of something we call our stock discovery engine. So I'd like to take a few minutes to really walk you through what this stock discovery engine can do for you. You're reading a lot about AI, artificial intelligence. Motley Fool had a big story about that. It's all over the papers, how AI is going to take over Wall Street. Well, we already have the stock discovery engine. It works the same way that Spotify finds you music, Netflix finds you movies that you like, or Amazon finds you everything else in the world. So on May 25th, for a webinar that I was doing that day, I seeded the stock discovery engine with Advanced Auto Parts. It showed me all the other auto parts stocks plus some retailers. Notice that O'Reilly was 240 at the time, down from its peak, but on the way to 170 in just 2 months, two months later. So I got stocks like Advanced Auto Parts stocks, large cap retailers with bearish earnings estimate trends that were at or near their lows. But I also got a potential swap. And the one that really attracted my eye was Best Buy, because Best Buy is one of the only big box retailers that survived the curse of Amazon. So based on this stock discovery engine, in a webinar that I did on May 25th, I said Best Buy can be bought ahead of the earnings. We had just had a oversold buy signal, new 8-day low, everything lined up, and Best Buy reported a positive earnings surprise, and the stock spiked up from 50 all the way to 60. It then pulled back, gave another oversold buy signal, rallied again, and then the curse of Amazon hit Best Buy when Amazon announced that they were going to come up with their own version of the Geek Squad. And the stock immediately dropped from about 59 all the way to 53, but it's starting to regroup. Notice that earlier today it was back up to 56.50, because Amazon is not going to take over the world. They're not going to own every business and be successful. If they get to that point, the government's going to step in with an antitrust suit. So is Amazon going to take over the whole food retailing business by buying Whole Foods? Are they going to undermine the auto parts companies? Are they going to eliminate Best Buy? Well, the reality is no. So follow the power gauge rating, because that is objective, not emotional. So we got this testimonial you're going to see in a second based on this bullish call spread that we recommended on that webinar. Buying the 50 call, selling the 57 call with only 1 week to go. And the reason 1 week, because the earnings were due out. So this is going to be either a winning trade or a write-off. And in this case, people who put that trade on realized the whole profit, almost 200%, in just 1 day. The spread went from 247 to 692 the next day after the earnings came out. And we got this testimonial from Frazier, who was a new Chaikin subscriber, 257% in 24 hours on earnings. I gave options one more try, and I was surprised with the results. A Best Buy options trade was my biggest winner. I don't think I ever would have attempted an earnings trade without the guidance in your webinars. We do these webinars at least once a week, and we have training sessions so that people who have been skittish about making these kinds of trades feel more confident. One more example from the stock discovery engine. Again, Starbucks was my bearish stock of the week 2 weeks ago at 58.76 or 59. It's trading at 57.50 right now. So I seeded the discovery engine with Starbucks, and it gave me 5 stocks that were similar to Starbucks. Food stocks, large cap, weak free cash flow at a sell signal. And the first one, the most relevant one, this is a relevance-based discovery engine, was Chipotle. It was trading at 395.83 with a very bearish power gauge rating. That's where the discovery engine showed me Chipotle. The stock dropped from 393 all the way to 340. It bounced today when they looked at the earnings report more closely, but imagine what kind of a put trade you could have put on in Chipotle and how much a 50-point drop in the stock would have profited that put trade. These are the kinds of trades that you need to envision and put them on, because they, as I said, they've worked over and over and over again over the last 6 years for our clients. So now you've gone through my ultimate checklist. Everything that we've talked about is embodied in Chaikin Analytics, which is a proven stock selection system based on a 20-factor model, which combines fundamentals and technicals. And it includes our stock discovery engine, so you can find ideas like Chipotle on the short side or Best Buy on the long side. It also includes our screener, and you saw examples of that for both large and small cap stocks, and our options play ideas module. Chaikin Analytics normally sells for $1,950 for an annual subscription. You can go to chaikinanalytics.com/stocks and subscribe right now. But as a webinar special, we'd like to take $200 off the price of the annual subscription, bringing it down to $1,750. And this offer is good until Sunday, July 30th. chaikinanalytics.com/stocks, or you can dial the number on the screen, 877-697-6783, if you have any questions, or email sales@chaikinanalytics.com. Now, in addition to everything else you've seen, you get our intraday charts, our earnings detail and earnings alerts, and then my weekly market insights, where you'll get these ideas like Excelis, like Starbucks, like the auto parts on the short side. Plus, as a Chaikin subscriber, you get small group tutorials. We run them 3 times a week. Joe Bacella, who's organized the webinar, is in charge of that with his team. Unlimited coaching and support. And if you need it, one-on-one coaching. Most people don't, but if you do, we have a special team that does that. And you get my colleague John Schlitz's daily morning insights before the opening, so you don't have to stay glued to CNBC. Now, Tom Gentile, who writes the options column for technical analysis of stocks and commodities every month, said this about Chaikin: gain the edge needed for trading success. As a rules-based trader in both stocks and options, I rely on quantitative analysis to give me the edge I need. Chaikin Analytics delivers something that very few software tools do: the ability to have superb charting, but also Mark's proprietary algorithm not found in standard charting software. I highly recommend Chaikin Analytics to anyone looking to gain an edge. That's the directional edge needed for trading success. So, as a fast action bonus, if you subscribe by midnight tonight, I want to take an additional $100 off the cost of Chaikin Analytics, reducing the price by $300 to $1,650. Plus, for the first 10 people who subscribe tonight, you'll get a free one-on-one 30-minute phone call with me after you've learned the ins and outs of Chaikin Analytics. So if you subscribe by midnight tonight, price is only $1,650, and for the first 10 people who subscribed, and I see that 2 people have done that already, you'll get a one-on-one phone call. chaikinanalytics.com/stocks. Barry, I'd like to thank you for turning out such a big audience. If you're still on the webinar and you want to make a few closing comments, that's great. Otherwise, Joe will take over. So let's see if Barry is still on. I think Barry is left. Oh, there he is.
Oh, I'm still here, Mark. Yep,
I
absolutely.
thought, like Elvis, you had left the building.
Oh no, I was watching everything, listening to every word, and I mean, gosh, I mean, there's really not much more to say after everything that you've not only said but also demonstrated, which I love, and tremendous testimonials from very high-level people, and you've got a legend in trading when you open up your charting platform and you look at the list of indicators, and there's somebody's name on those indicators. Well, Mark Chaikin is one of the very, very, very few people that fulfills that qualification. So it just doesn't get any better than this. So it comes with my full recommendation. I just want to add that. And I just think, Mark is the best. So you will not go wrong by taking him up on this very, very generous offer. So I want to thank you, Mark, for sharing with my people today. And it's really been a joy for me to be here and to participate. And I've heard you before, of course, but to listen to you again and picked up some new things here today myself. So thank you very much.
Well, thank you for staying on. And with that, I'd like to turn it back to Joe Bochella to wrap up the webinar. And Joe, I assume you've put the link into the question box, chat box.
That's right. So I just chatted out to everybody. In fact, there was just a question, what was the promo code? Well, what you can do is we've already had that applied. If you use the link in the chat room, you can go right to chaikinanalytics.com/stocks. And in fact, I'll show you what I'm referring to here in just a moment. But again, that's chaikinanalytics.com/stocks. That is for Mark's offer, $16.50 for a full year to Chaikin Analytics. This would be a one-time subscription, obviously for a full year's worth of access. But with all of that in mind, given that it is Thursday afternoon, part of your subscription includes those support webinars, as Mark mentioned. We will be hosting our onboard session tomorrow afternoon at 2 o'clock Eastern time. We will be recording the session, but we'd love to have you join us for a complete walkthrough, a complete overview of the Chaikin Analytics program. We're going to cover everything from the functionality, how do you add your own portfolio to Chaikin Analytics, to really understanding the technicalities. How can you apply our analysis to your positions, whether you're trading or managing longer positions, whatever it might be, we'll be able to cater to it. So we'd love to have you join us, but first make sure to take advantage of Mark's offer here, $16.50 for a full year at Chaikin. You'll see the discount code automatically applied as you see on the screen right now. You can reach us directly at 877-978-6257. Our support team is sticking around a little bit later on today, and I know they're available right now if you'd like to give them a call. Or of course, you can just go again right to chaikinanalytics.com/stocks. So on behalf of everybody, thank you so much for joining us today. Enjoy your evening, and we will see you tomorrow on the onboard session.
Thank you, Joe.